Learning lessons can be a painful and difficult thing to do, but if crypto is going to fulfill all its promise, it's going to have to do some studying. Crypto is growing up, coming of age, maturing, however you want to phrase it, it's getting older. Bitcoin officially became a teenager this year. That's an age where typically we start challenging the older and the wiser around us, perhaps trying to figure out our place in the world. For crypto, we're still a ways away from consensus on what exactly that place is. As this maturing continues, however, some are urging the sector to look to its older, wiser peers for lessons. So let's talk in this episode about exchanges. Those have been around for quite some time. Supposedly the founding of the Dutch East India Company in 1602 was the first official exchange of stocks, although its thoughts and form of a market for shares existed as long ago as ancient Roman times. Regardless, it's really in the last 100 years that exchanges, and stock exchanges in particular, have seen big change. From the painful aftermath of the crash in 1929 through to the advancement of electronic trading at the end of the 20th century, and then ultimately the abandonment of stock exchange halls in places like Hong Kong more recently. Exchanges have come a long way. Among the pioneers of change has been Nasdaq. Opened in 1971, it was the world's first electronic stock market and went on to boast some of the biggest names in tech listing on it. These days, it sees itself as more of a tech firm as well, and it's the technology that Nasdaq's head of Asia Pacific and Japan, Ulf Carlsson, reckons crypto needs to learn the biggest lesson.
Historically, the crypto markets have been using technology that has been bespoke for every single market, and they have had a different setup and purposes. I think you will see a natural standardization when the institution and more professional trading firms coming into the market space, because they will demand and prioritize markets that does that.
Amid the shifts in physical operation, though, trading hours have remained broadly similar. Unlike crypto exchanges, which are 24/7, traditional exchanges are still only open for a limited number of hours each day. They also shut over the weekend, on public holidays, or even, in some cases, for bad weather. The rules that govern exchanges have had a long time to be put in place and then subsequently refined, but it's precisely these sorts of rules which some reckon crypto exchanges now need in order to jump to the next level in development.
Where you build infrastructure that is transparent, you know what's going on. It's easy for the participants as well as the regulator to understand the trading behavior, how you were matched, who you matched with. You need to have tools to be able to surveil, understand the trading goes on. If you are a participant, you should be able to trust that your assets are stored in the right way, that it's transparent how they are treated. You also that the trading environment is a trading environment where you feel protected as an investor.
Regulators are catching up though. While that's making things clearer for crypto firms, it's also encouraging traditional markets to look at incorporating digital assets. Tel Aviv's stock exchange recently announced it was setting up a crypto trading platform, and people like Dave Chapman from BC Technology Group say this trend shows lessons are being learned by both sides.
Whether it was banks, regulators, and traditional infrastructure players, that they actually probably went and tried to actually dismiss this asset class, try to stop it from actually happening. But in the same way that we saw the mass adoption of the internet disrupt everything from commerce to entertainment, with the invention of decentralized technologies like Bitcoin, in the same way you can't stop the internet, you can't actually stop cryptocurrency or these decentralized protocols.
So if crypto exchanges are learning from traditional ones, and traditional exchanges are learning from crypto, what does the exchange of the future look like? Here's John Buckley, Head of Operations and Transformation at Hong Kong Exchanges and Clearing.
I think it will be asset agnostic, it will be modular and open architecture, it will be cloud, hybrid cloud, and that's very much driven by some of the architecture of what you see in digital exchanges today. And I think that convergence will come into play.
Alright, like and subscribe to this video for more content like it, and let us know your thoughts about crypto exchanges, traditional exchanges, the future of all of those in the comments. Here's also a quick reminder that Forkast's latest Crypto Rising livestream event is coming up. It's at 9 p.m. Eastern, November 14th, 9 a.m. Hong Kong time on November the 15th. Forkast's editor-in-chief Angie Lau will be leading the conversation into why some investors and VCs are still betting big on digital asset startups despite the crypto winter. Sign up at Forkast.News or by clicking the link in the description below.